Okay, folks, if you look at this price action that you're seeing in the dollar index, this is really typical before you get explosive price action moves. What you're seeing, if you notice this, look, you're seeing Harami inside bar, followed by Harami inside bar, followed by an inside bar of the main two candles, followed by another Harami inside bar, followed by, another inside bar. And all this is, if you think this is coiling, like it's coiling, 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 and it's ready to explode higher. Now, the direction is obviously harder to tell. We'd need a catalyst. And what makes this more complicated is with this weird holiday thin trading conditions. So if you think about it from a psychological perspective, it's like indecision, 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 indecision. And then when you get a catalyst for change, that's what you're looking for. You're going to get explosive price moves. Now, this can work a few different ways. You can see a fake move up and then a rejection and then a sharp move lower because it's a false break of this kind of condensing action. If you looked at this on the intraday charts, what you're really seeing is a kind of wedge, symmetrical triangle, that kind of bottoming pattern, right? Now, this is usually you would want this to have broken out before now. So it's slightly more confusing. But the general principle is this: is when you start seeing this, look for explosive action. Now, if there's all of a sudden, if there's a strong reason to buy the dollar, right, then it stops at just the other side of the structure and you've got a good run higher. Or if there's a good reason to sell the dollar, you can go with the break of that intraday trend line, stops the other side. So just be aware this is short-term opportunity if you get a clear catalyst. Now we may not get a catalyst, okay, that's for sure, and it's holiday thin trading, so I'm definitely not saying to trade this. But if you look on the euro US dollar, right, you can see exactly the same kind of moves, which is what you expect. Is that the euro US dollar is the anti-dollar index, but this is mainly just for a learning point of view, right? What I want you to see is when you get this, right, this is typically getting ready for some kind of explosive price action. So if you've ever got a reason to buy or sell it, on a risk event or central bank speaker or anything like that, then this is a great technical setup because you get a breakout, retest, and a move. Don't forget, you can't have a fake out. So if it just breaks out for no reason, you're more vulnerable to a fake out. But if you get a catalyst, put it into your trading arsenal, store it away. Coiling action. Tight, 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 tight spring. That's what you do. Tight, 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 tight spring. Once you get that kind of feel for it, that's what you're looking for. And it's a major euro US dollar index. It's just looked at around the whole world. This would be great if folks weren't on holiday. But nevertheless, just keep it in mind. And even if you get like a post-holiday breakout, still keep this structure in mind because it could still be a reference point. Just tuck it away for now.